What's going on? We have another Discord meeting. We love to record these. We love to be here with our Discord members because it gives us a chance to have that one-on-one interaction. So if you guys have anything that you want to ask, just unmute your mic, say hello, and ask whatever questions you have. We are doing technical analysis today, so I hope you guys enjoy it. All right, we got B. Stewie, Daniel, Jimmy, Kai, Zamora, Yosef, and Zion. Zion's first time here. What's going on, guys? I'm sure we'll get more piling in here as we go. But as I said, we are going to be doing technical analysis today. It's a little bit different. It's not going to be so poppy. It's not going to be so splashy. It's not going to be too YouTubey. I'm just here talking to you guys, and I want you guys to really feel this out. I want you to understand this. So we're going to start with the S&P 500. A lot of people use this as their benchmark. If you can't beat the S&P 500, then you might as well join the S&P 500 and just stick all your money in here. So with that being said, I like to do technical analysis on the S&P 500 because the first thing that we want to know, just like in Can-Slim from How to Make Money in Stocks by William O'Neill, is we want to understand the market direction, because if you guys have been with me at all, you'll understand if you understand the market direction, you'll have a better idea of whether you should be risk on or risk off, right? So I use technical analysis to help me do that. I also use these moving averages to help me with that. But today we're going to get rid of these moving averages and we're only going to look at price and action, also known as technical analysis, because if we can see these areas that are areas of support and resistance, that is price action. Everything that you see here that you're looking at is price action. And if we just draw these simple lines, like we'll take this one and draw it here, this is price action because we've seen the price, right? It comes up and it smacks this area and it comes back down, right? And it comes back up and look, it hits all-time high, smacks that area, not just once, but twice, 3 times. I'm just going to zoom in here so you guys can see this. 4 times, 5 times. It just can't get above it, right? And because it can't get above this area of 565, the all-time high since July 16th, then what does it do? It comes back down. And we don't know where this thing's going to land, but we can guess. What do? We're going to find the next area that it hit on multiple occasions. So, of course, if we do the replay on this, we're going to say we're here, okay? And we're looking at this on this day right here. This is August 29th. I did a huge video in August and just nailed everything right on the head. I'm not here to toot my own horn. I'm just saying all I was using was technical analysis, guys, okay? Now, here's the top. We've identified the top, the resistance line, and we need to understand where this might fall. The only thing that we have to understand where it might fall is technical analysis. So if I'm looking at this, if I want to draw a line in here, where would be the biggest area of support? That's what I'm asking myself. So I look right here and I see it's been supported right here at this 540 area multiple times, right? You can see it 1, 2, 3 different times. It also came down to the same area and touched it 1, 2, 3, 4, 5, 6, 7, 8 different times, right? And we can see right here as well, it held as support 1, 2, 3, 4, 5 different times before it broke through it, right? So if we just line this up and we get ourselves a $540 area, and, you know, I say 540 because we'll get into that too. We like round numbers here, okay? Then if we hit play, and we'll see, we're going to watch this from August 29th, and we're going to see where it plays out to. So now, of course, I've seen this already in hindsight, but this is the area that we would want to pick. And then we're going to go in and we're going to look at the future as well. I'm going to go ahead and show you what I think is possible for the S&P 500 in the future. So if I click play, you can see right here, it came right down and it bounced off that area, okay? Is that a coincidence? Did I already know it was going to come down there? Well, if I use technical analysis, we can at least have an average area of where it might come down here. But look where it came right back up to that 562, right? So let's slow this thing down, all right? All right, we slowed this thing down, and now look, it looks like it's starting to break through, and boom, it breaks back up above that, okay? So now that it's broke above this area of what was resistance, why? Because it can't get through there. There's resistance, right? It's resisting going through there. And it came back down and it found support on this area and started to bounce back up. We're going to call this a new higher low, which is one of the very first characteristics in a bullish trend. Okay, so now we're going to draw a trend line. So we have an area of support and an area of resistance, and now we have a trend line. Okay, so I'm just going to go ahead and draw that out. These are my three main principles: horizontal lines and trend lines. It is that simple. It really is. Okay, there's no reason to make anything more complicated than what I just showed you. It's really, really not. And we're going to go through quite a few more examples, but right now I just want to focus on the S&P 500 because we want to understand the market's direction before we do anything else. Okay, so all the way back here in September, let's say on September 19th, we break above this area of resistance. Now, we could, dedicate ourselves and ask, well, what about the volume? What about this? What about that? What we really just want to look at right now is just the price action, okay? Price action tells us that it broke through an area of 563 that was acting as resistance. And now that we're above it, what are we doing up here? What's above it? There's nothing above it. There's no resistance, right? The only thing we have to act on is support. So what do we expect to happen? Well, I'm going to expect this to go higher here. So let's just go ahead and play this through. Let me speed this up by, let's go 3x. And we're going to speed this thing up here. And look, it comes right back down and look where it touches. This isn't magic. This is price action. This literally is a line that I drew out from here. It also was here. It broke above it. So when resistance is broken, it then acts as support. So now that we broke above this resistance, we're calling this support, just like we were doing down here. This is now support. It came back down to this area, and look, not only did it bounce off of the area of what is now support, but look at that simple trend line I drew off of this area. It's also holding that trend line. So this, at this point, just looking at price action, I would say to myself, this looks very bullish, okay? Now, I could be wrong. I really don't even know. Yes, I seen this a few minutes ago, but we could break back down. But what we need to understand at this point in time, we're not predicting whether it's going to go higher or lower, but we are reacting to the price action. Reacting to this price action because this was an area of resistance. Now that we broke above, it's going to act as an area of support. So we came back down and we bounced off of the two technical areas. So I would say, hey, I am bullish and I am risk on in this situation. Now, I just want to see, okay, and look at this. It coincides with my market indicators, my Market Smith indicators. This is the 10 and 21 day moving average. All right, I'm just going to blow it up so you guys can see it a little bit better. Now look, it bounced off of a 21-day moving average. I love to use that 21-day moving average as my risk on or risk off scenario. In this case, after we broke above this area, I was very risk on. I was risk on down here, but to break above an area like this, it makes me feel much more bullish. We came right back down, we retested this area, not only a trend line, not only a price action area of support, but it's my 21-day moving average that we're retesting. And it's gone higher. So I'm going to expect this thing to go higher, okay? So we hit play, and look, it comes back down, it retests, it breaks out higher, and look at this thing, right? It continues higher, okay? Now this right here is as simple as it gets, guys. It really is. Now when you're looking at this thing and you're staring at tick by tick, it can get frustrating. But there's times where we say we are risk on, and there's times we say we are risk off due to market direction. And if we use technical analysis paired with moving averages, that's what helps me risk on, risk off. Now, I did it without the moving averages because price action is king. It doesn't matter what any of your dumb indicators are telling you. If price action is telling you that it's bullish, then it's bullish, right? The moving averages are just a guide, but price action is king, okay? So let's go ahead and let this play out, okay? We're going to zoom out here. We're going to let this thing play out, okay? This here is the presidential election where Trump actually got elected, and now we're just waiting for him to get in. This is what I called the Prezi gap up, okay? This purple line, the Prezi gap. And we went much, much higher, and we came really high, and we started talking tariffs. There was a lot of, fear in the market. Some people were worried he was going to get assassinated again, all that stuff. Now, let me just zoom. This is where we're at present day. So what do I see here? I see support at 563, but I also see that it came right back down and created another new higher low before it gapped up, okay? Now, we talked about this when we started to pull back here. I told you if it broke 580, we have a chance of heading much, much lower. But if it holds this Prezi gap up and continues higher, it's going to be our new higher low. And that's exactly what happened here. I was worried if it broke this area, this 580 area, that we had a chance to really flush down to 563 or all the way to 540. That was my biggest concern in the overall market. So we did. We broke that 580. It was very disturbing, very nerve-wracking in the market. I was risk off from way up here because of the 21-day moving average. So with technical analysis, guys, just like I did down here, I'm going to plot out my same lines. So where's my resistance? Right here, all-time high. More than once has it hit this area. We've hit it once, twice, 3 times, 4, 5. We'll call it 6, 7, 8 times right here in a week span from December 4th all the way through December 16th. All right, so a few weeks. This is the resistance area. 608.74 on the S&P 500 is resistance, okay? This is present day. Now look, we have a melt up. After we cover this Prezi gap, we have a melt up, meaning the market is literally gapping up over itself overnight and just launched itself right up to those all-time highs. What do you think is going to happen at these all-time highs? I can tell you right now, it's going to act as resistance, okay? One way or another, we are going to see some type of resistance form here. If it breaks through like it's just slicing through butter, then you are going to see the most astronomical push even higher because of what has happened, okay? But if we are looking at the chart, I am not going to be surprised at all if this acts as that resistance and starts to pull back. What do I want to see? A new higher low, just like we've seen here, just like we've seen here, just like we've seen here. I want to see a new higher low. So if this thing falters, if it can't get any higher, best case scenario is it just gaps up and goes, right? But best case scenario, if this resistance acts as resistance, is we hit it, we touch it, whether it's in pre-market or in the morning, we come back down and we hold a new higher low, let's say somewhere in this area. Anywhere above this Prezi gap up for a new higher low before we head higher is going to be a much more understandable and safe way to think about things. Does that mean that I'm going to be risk off? Well, I use the moving averages as guides. Currently, we're above all moving averages. The 10 is crossed over the 21. Some people like to consider that, the death cross or whatever. It's uncrossing, but If we continue higher or even trade sideways up here, the moving averages will line back up and we'll have a nice, clean, strong bull run. But what I much rather see is more people getting in to this rather than fear of missing out getting in, boom, bust cycle. I want to see it trade sideways here. Okay, even if it were to trade sideways up more towards the top. But regardless, I don't want to get too far from the technical analysis. Okay, we can see here when we drew this that we broke this area. Well, that's pretty concerning, right? Well, that's one piece of technical advice that you can create for yourself. We're on an uptrend. We broke the uptrend. We need to take heed. We need to be safe. We need to make ourselves a little bit more comfortable, right? So let's say you're over leveraged or you have too many shares. When we break a trend like this, you can reduce your share size. You can protect your account a little bit more, right? Of course, tons of volatility with the presidential election, the inauguration, everything like that. I am still expecting there to be some potential volatility. And that potential volatility is going to run into resistance, and then we're going to find support. Where's our next area of support? So we have this support, this support. Our next area of support is going to be right around here. And if you guys don't understand why just yet, I'll continue to explain. Our next area of support is here because this price action has shown that this 585 area is extremely important. It has touched 1, 2, 3, 4, 5, 6 times here, 7, 8, 9, 10, 11 times here, 12, 13 times here, 14, 15 times here, 16 times here. This area of 584, yes, has broken through at times, but it has shown that this is the biggest area of price action most recently. Our next area would be 599, which we're going to get into the psychologicals now. Okay, here is another area of support. It's much weaker than this because I counted this out. This is 11 times. This is hit at 1, 2. We could count that 3, 4, 5, 6, 7, 8, 9. You can kind of call that 10 times. So it's pretty supportive. But I still personally think that this 585 area is much stronger. Okay. Do we have any questions on the technical analysis of the S&P 500?
It could go like just, I don't know. Is it possible that instead of it going bullish, that it just goes the opposite way and it just becomes a bear market or some sort of correction happens?
Absolutely. And I really like that you bring that up because, I always talk positively. I always say it pays to be positive. And the reason why, if we go to the monthly time frame, look at the S&P 500, guys. It goes up. That's what the S&P 500 does. And it has these corrections. That's what it does. So when you say, well, could it go into a bear market? Absolutely. It absolutely could. But that is why we put these technical areas on here. We know that this 610 area is an area of resistance. I'm expecting it to pull back. The next question is, where is it going to find support? Are we going to see it find support at 600? Well, if it breaks through 600, then our next area of support is going to be down here at 585. If it creates a new higher low, for instance, if it breaks through 600 or even bounces a little and breaks through, our next question is going to be, okay, well, where is it going to stop? Bullish scenario would be that it creates a new higher low before it ever hits this 584. It creates a new higher low and heads higher. Okay. If it came down all the way down and retested this and bounced, that's still holding an area of support. If it bounces, creates a new lower high and heads lower and breaks through this area of 584, then that is going to be a very bearish sign because now we have a high, a new higher low, a new higher low, and we're breaking an area of support. So that's 3 strikes, I'm out. That is, okay, we're going to head lower much faster because we're losing our support. We're not creating new highs in the market. That's a bad sign. Same thing for this. When we were here in the market, Let me just get rid of some of this, guys. When we were here in the market, right here, we had a high, we had a lower high and a lower high. That's a bad sign. That is a very bad sign. Then we broke 584. I actually was talking about the 580, but this is a very technical area too. So that we broke this 584. That's why I was nervous. I said we have 3 new higher lows and we're breaking a key area of support. You could consider this support, 580 and 584. That's not a good sign in the market. The inauguration happened and the market rallied on that news. So could it? Absolutely. It absolutely could. But I always say it pays to be positive. So I will continue to always be positive until A, we find this as resistance, this area here because of this, and B, when we start breaking support areas and creating new lower lows again. But right now, we're creating a new higher low if it pulls back and holds one of these areas, okay? Does that make sense?
Yeah, yeah, it makes sense. Is it possible to move sideways between an area of support and resistance and create a new area of support in between the area of support and resistance?
Um, I would just say that if we were trading sideways in between 2 areas of support and resistance, then I would say that would only strengthen the argument that those are areas of support and resistance. For example, if we were to trade just like here, see how it's bouncing up and down right in this area? It's just kind of going up and down, up and down, up and down. Well, this thing broke back up and now we're stuck in this same channel, okay? So if this thing were to bounce around here, no matter what it does, it's still bouncing in that same area of support and resistance, and we're waiting for it to break through. Because one thing I don't want you guys to really hone in on are lines. I want you guys to understand these are areas. These are areas. So it would be 584, yes, but it's going to be this whole area between let's call it 580 and 587. You know, that's going to be the area because it just doesn't stop on a notch. You know, it just doesn't smack into it and say, okay, well, that's 580. We're done trading or we're going to go higher from here. So it's an area. This whole section, this is a whole area, you know. Does that answer your question? Okay, good. So the next things I want to show you, because this is the S&P 500, I want to show it to you on some stocks, okay? And one thing that we actually brought up just the other day was NVIDIA. So you guys know that I like playing base and trend breakouts. One of my favorite base breakouts was on NVIDIA. This used to be the 500 before it split. So we're going to go ahead and zoom in here on this on the daily time frame. And you can see here we have an area of support and an area of resistance, okay? Here's your area of support. After this thing broke out on earnings because we had a double beat, 18% and 10%, this is when the AI started to really ramp up and take off, okay? It broke up and it broke above this high, and every time it would come down, it would test this area and find it as support. It did it once, it did it twice, it did it 3, 4 different times, okay? So it held that support. We're looking for new higher lows on this, and we can see it right here. We got the new higher lows, okay? We're also looking for an area of resistance, and you can see I have that marked out right here. Not only was this an area of resistance, technically, but it was psychologically as well. So what do I mean by psychologically? It was a round number. Now it says 50, but in the day that I was trading it, it was 500. Very psychological. All these round numbers are very psychological. And kudos goes to anybody out there that can tell me the stock that hit a psychological number today and then failed at that psychological number. So I'll let you guys think about it. But if you guys can tell me, it's a huge kudos to you because I'm going to bring it up after this one. So here's your support, here's your resistance, okay? This thing breaks above its support, and it breaks above its resistance, turns into support. This thing traded sideways for about 6 months, if I remember right. So June, July, August, September, October, November, almost 7 months. Almost 7 months. The longer the base, the more times it hits support and resistance, the better the breakout will be. And that's exactly what happened with NVIDIA. Now, of course, I've learned a lot more since this happened back in 2023. But if I knew then what I know now, I would have put a lot more money into this thing. Okay, I would have more millions. You know what I mean? But it's one of those things that I'll never forget this because the base was so long, it was so drawn out. I talked about it so much, and I did not play it nearly as well as I should have. With that being said, I want you guys to burn this image into your brain. Here's your support, here's your resistance. That simple. When it breaks above this area, and it broke out on volume, I was sitting here right here when it did, and I took it. I remember I bought it at $502, and it went to $510 within a blink of an eye. It was crazy how fast NVIDIA was moving for a tech giant even then. So support, resistance, when we trade sideways and we bounce in between the support and the resistance, now we start creating new higher lows, okay? Here's your lows, your area of resistance, support. Now it's created this new higher low. It stopped. It stopped here. And it started to create a new higher low, and it bounced off resistance again and came right back down. But instead of breaking this new area, this new higher low, or heading back down and bouncing off of its area of support, it created another new higher low here. So what do these new higher lows create? Very simple, and I'm glad you asked. It creates a trend line, okay? Now, this trend line, if we just look at this area here, is looking like a flagging pattern. Now, the flagging pattern looks a lot more like this, where it comes up and it does this, okay? Or like this and goes up like this, okay? But it's all relative. It's all how you look at it. This is creating a new higher low, new higher low. It's getting tight right here, very, very tight into this area of resistance, and then it breaks out on volume and it never looked back. It did here a little bit. Great buying opportunity in hindsight. Okay. Now, with that being said, this I will never, ever, ever forget. Never. Huge area of support, huge area of resistance. It climbed, it got higher, it got tighter, and then it broke out on volume, and NVIDIA is still proving itself to be a leader today. Now, if we look at NVIDIA here, you can also see this trend line that I created, an area of resistance, and now it's acting as an area of what? Support. This is now an area of support. And it's been holding this area of support at 130 for a very long time. Okay, so now this new base that we have an area of resistance here at 150. We have an area of support at 130, and it's been bouncing around. How long will this bounce around before it tells us which way it wants to go? Regardless, we have our area of support and our area of resistance. If it breaks through here and continues higher, you can take this risking previous day, because guess what? If it doesn't want to take off tomorrow, then you will stop out for a small loss. But if it does break out tomorrow and it has continuation, your risk is small, but your reward is very, very high. Okay. Now, I'm looking at a few other things like AVGO or ARM. There's quite a few other different stocks that you can look at. But when you take into account technical analysis, it's really that simple. And it's a guide. It's a guide to tell you where things are being supported and where the resistance is. And then we can simply put a trend line on it to help guide you, help you understand. So I have given you two examples. I've used the S&P 500 and now I've used NVIDIA. I want to use Netflix today. So this is the area of psychological resistance. I didn't put this in the chat this morning. I was stinking busy, but last night I seen it. I seen it pop way up. It broke this area, this all-time high, and it continued higher. And I was thinking to myself, it's going to be a magnet for 1,000. That's what's going to happen. It's going to be a magnet to 1,000. And if you look at this on the daily time frame, you can see, look at this. It went right up to 1,000. It's like 999.32 or something like that, right? Let's put this on the hourly and see exactly where it went. So it's showing here 999.8 cents. So it got right up to that $1,000 area and it failed. Why did it fail? Because people see 1,000 and they are selling. They're selling at 1,000, or they started to sell right before 1,000, and then you see everybody else following suit, right? There's some psychological BS going in there too, but you got to understand it's a psychological area of resistance. There's nothing else above this. When it broke and it's blue skies, there's nothing above this. There's no support. There's no resistance. There's no nothing. So why did it fail at 1,000? Very clear cut, very easy to understand. It is a psychological area of resistance, okay? So you can't use technical analysis up here, but you have to understand the psychological or the psychological resistance in those areas, okay? With that being said, anytime you pull open a chart, make sure you're using the daily and zoom out, zoom way out, because about almost every time you can draw a trend line from its base and do something like this. Oh, that's trending up. This is a good stock to find an area to buy into, right? Whether it's a trend or base breakout. You can look at any damn stock and pull it and zoom it back, and you'll see this thing's been trending up for years and years and years. You know, this is a leader, okay? And then we can pull up, a stock like this. I'll click on any one of these, and we zoom out. I'll zoom out on this daily time frame here. And what I want you guys to understand here is that, okay, it's recording. What you can see here using these technical patterns is you can simply just, draw a trend line on this and see it's trending down. You can see these technical patterns every time it busts up and breaks up, it comes right back down. So when you're looking at these stocks, find something that is actually trading in an uptrend, because the trend is your friend. When you look at things like this, a lot of people come to me and they get really excited. They say, what about ASST? Well, sure, ASST looks great to you because it moved up 200% at one point in time. But if we zoom out, look at this thing. If we zoom out, you can clearly see that this is trending down, right? And you might say, oh, well, it broke out of its trend line. Well, you could have said the same thing right here. You could have said the same thing right here. It's just, this is what it does. You can see using technical analysis, every time it pops up, it fails. Every time it pops up, it fails. This pop that it just had on ASST, what do you think's going to happen? I'll tell you, I want to put my money somewhere else. I rather look at something that's trending up. I rather look at something that's creating new, higher lows, okay? So I'll take you to one of the stocks that I'm trading right now. I only got 3 shares of this. I wish I could have bought more. I might add into this because it retested, but now it broke up much higher today, okay? I'm using this as a base, but it was also a trend. And you can see my 2 lines here. Here's a basing area at 342. And this is also a trending area from this down. And it broke out in this key area. That's why I took it. I took the trend and base breakout. It's a double whammy for me. The next day it pulled back, but it never broke previous day's low or a 10-day moving average. I held on to it. And now we break up higher on a little bit higher volume. I'd rather see much higher volume than that breaking out, but regardless, that's not the point I'm trying to make here. We find these stocks that are trending up. This is trending up, okay? You can clearly see it make a simple drawing here. It's clearly trending up, right? The line goes up, okay? But when we look at this, it created a big push of volume and it pulls back. And now we're looking for the base or the trend. And that's exactly what we have. Now it's a trade. Now it's something that I want to play with. Here's deck. Right here is your basing breakout. Okay, you can, if we zoom out, first of all, we'll zoom out. You can see this is clearly trending up. It's above a 200-day moving average. The 200-day moving average is rising. It's trending up. Then we have a basing pattern right here at this top. A beautiful basing pattern. You can also look at this on a trend. A trend. Okay? Either way, it breaks above that trend. We're in it. We got in this once the market told us that we could be risk on. And now it has continued higher. Okay? And that's deck. And this situation goes on and on and on. Now, a lot of people say, well, I don't know where to draw my trend lines. I don't know where to draw my resistance and my support. But really, I think what a big issue people have is they zoom too far in. Here's Microsoft. I can see clear as day right now. If I click this, we have an area that hit 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'm not even going to count all these days. Okay? I could just go like this. Boop. It's this area right here. Okay? Now, you don't have to consider it 431.56. That's its area of resistance. No, it's an area of resistance. We can pull this and say, there. That is its area of resistance. Well, guess what today, folks? This area of resistance has been breached. The last time it was breached, it broke right back through and came right back down. This time, when it breached, it broke right back through and came right back down. What's concerning? It created a new lower low. Okay? Now, what do we want to see? Let's look at this trend. This trend is forming up. Okay? Let's not get confused with this one. We're going to look at more short term. This trend is forming up. We are making new higher lows here, new lower lows here. And to me, it looks like this thing is going to get tighter and tighter before it makes a decision. Which way will it validate? Well, we're in an area of resistance. We have a trending support. Let's see if it's going to break higher or lower here. It just needs more time, and we need to get tighter. Because these wide, loose, choppy action, you don't know what's going to happen. Nobody knows what's going to happen, right? So that's why we use trend lines and higher lows and lower highs to be able to take a trade. We want to see a nice tightening action. Because after expansion comes, what's the word I'm looking for? After expansion, we want to see contraction. Thank you very much. So after expansion, look at all this expansion. It's very expanded, right? And what do I mean by expansion? Okay, it's moved 20%. Okay, now this next area, this next new higher low, has only moved 14%. This next new area off of its low only moved 11%. Okay, we want to see this get a little tighter. Let's go 8%. Let's make it 3%. And now, before we take a trade, now it's 1%. And now we're going to risk the previous day's low, so that way we have much more room to head much higher when our risk is small. Where if you tried to buy it somewhere in this area, you're having a risk all the way down here, and you don't know where this is going to go. It's so wide and choppy. It's just an ugly, ugly chart. So that's what we're waiting for, folks. We're waiting for clean entries. We're waiting for support and resistance to show its head, for the expansion to contract, show new higher lows, new lower highs, and get into a tightening range. And if that sounds like a lot for you to understand, all you need to do is hear it over and over and over again, and I promise you, you will get it, you will understand it, and you will start seeing trades like NVIDIA, okay? Like let's look at AVGL. I just took this one the other day, okay? Now look at this. I drew this out. Oops. I drew this out because I play best case scenario, right? I see a huge push up on volume. Here's your expansion. and it starts to contract. It starts getting tighter and tighter, creating new higher lows and new lower highs. What I wanted to see was this exact, I said, this is the picture perfect look for me. If it were to get tighter and tighter, creating this area of support and creating a flagging pattern before it broke up higher. That would have been my, my number one look. Or if this were to create, it could still do this too, where it's, it's come up here now and it creates this tightening pattern where we have a basing area right here, and then it breaks out from this area. There's multiple ways to look at these patterns, but this is what I drew out before, and it broke its trend, so I took the trade. And now I'm holding on to it. We're going to see what happens with this. So this is Technical Analysis 101. It really is. You can keep it so simple, folks. You don't have to make it difficult. I think people look into this and they think too hard. I think the biggest issue is people need to zoom out. You need to use the daily and sometimes the weekly time frame to really see these areas. Because if I make this area my area of resistance, but I'm looking at it on a 1 minute time frame, you're not going to see that area on a 1 minute time frame. It looks like shit. So zoom out, use the weekly, use the daily time frames, find those pockets of resistance and support, and play off of those. Do we have any questions? Not even one question. You guys are all experts already. Well, I'll tell you what, guys.
David?
Yeah, what's up?
I was wondering about with Avgo, because I'm wondering if it's bonking its head there just because it is at that 250.
Absolutely. Actually, I have my alert set on my brokerage here. I actually have my alert set to reduce my share size right here, and it almost hit it today. Because you're right, 250, psychological area and an area of resistance because of all-time highs. I was actually going to take 1/3 out of my shares once it broke this, but it never broke, so I never took anything out. Now, with that being said, yes, this is an area of resistance, but the biggest issue with it is it's not the biggest. It's not a huge area of resistance. We haven't, actually, if we look at the volume traded on this, I would consider this 245 a little bit stronger of an area of resistance. So we got through it, but yes, that 250 is going to be your psychological area of resistance and the all-time high.
I was thinking if it went sideways up there at the top, if it just stayed sideways at the top for a bit,
yes,
then it wouldn't be that big of a deal.
I agree 100%. I drew it out a little bit, but like a high tight flag, it's starting to form kind of a high tight flag, right? If it can go do something like this.
Yeah.
And let's say, just for like reference here. So it's doing something like this. Let's say it does this let's go all the way into April, right? Let's say it does this all the way into April. That would be a God-given stock right there. Because if it breaks out from this long of a base, the longer the base, the bigger the breakout. Whether it's up or down, the longer the base, the bigger the breakout. So yes, and I hope it does do that, just for the sake of our shares, right? If we can hold on to it, let that baby ride, I'll be patient enough. I'll let it go, let it rip, tater chip. But yeah, I agree with you on Avgo, as you called it.
Yeah, thank you.
You're welcome. Another key area was that $100,000 on Bitcoin, guys. Look, it's just chopping around this area. It's a big area, It's a very big area, and there's good reason for it too. We had a huge push up here. This $100,000 area, which way are we going to break? Right now, we're creating areas of support and areas of resistance. What's up, Dan Bob?
I've been trying to use the week time frame more, especially for identifying the trend.
Absolutely.
It seems to be a little bit more clear there. What are your thoughts on whether you should use the day or the week?
I'm telling you, I started on the 1 and 5 minute time frame, trying to scalp, trying to short penny stocks, trying to go long in penny stocks. Then I went to the hourly. Then I went to the daily, and then once you go to the daily, even if you're trying to short penny stocks on the 5 and 1 minute time frame, if you zoom out to the daily, I found you get so much more information. You can see where the baggies are being held. If you're zooming out to a weekly and a monthly, now you're doing what one of the greatest investors that we have in our time right now, Oliver Kell, he uses the weekly and the monthly. He also uses multiple time frames to find confluency across those markets. So yes, the 5 minute time frame is good. The 4 hour time frame is good. The daily's great. The weekly's great. The monthly's great. But when you put all of those together and you find confluency across those markets, that's when you really start making the big money. And that's what Oliver Kell does. He uses multiple time frames to see and understand where everything's at. So yes, I agree with you 100%. And I think one thing that I would like to do is start using bigger time frames in our thing. So right here, I'm just going to do simple trend lines here. Now this is channel lines. These are channel regression lines, if you will. And Mike Webster likes to do these with IBD. And this just gives you kind of an idea of where we're headed. And I think for me to say, hey, we might find some resistance here and pull back is not too silly to say, because look at this week. This week, we're really ramping up there. I think this week is going to end up just like this month in July, where we had a huge pullback. We found the regression line. We continued higher. We found the all-time high area of resistance. We pulled back, found support, and then headed higher and finally broke through that area of resistance. Same thing here. Huge push up, found a new high, pulled back, found that support, popped back up. We're running right into a new all-time high. Are we going to get through it? Probably not. Look at this huge week. We pushed up. We're much higher. We'll probably pull back, find this regression line, make a new high or low somewhere here before we break that area and head higher, just like we did in this area. So it's all the emotion that's in the trading world. And if you can zoom out, then you're not looking at something like this thinking, oh my gosh, like look at this. This thing went straight up, You can zoom out, you can get the bigger picture, and you can kind of, calm yourself. There's just so much emotion in the market. This technical analysis really breaks things down. So yeah, I 100% agree with you, Dan Bob. Using those weekly time frames, once you start zooming out, you start seeing the bigger picture, and you can really digest the information a little bit better. What up, Swolzenberg? I wish you were here about 45 minutes ago. We just went through a whole thing on technical analysis, brother. But I am glad you're here. Do we have any more questions, guys? Is there anybody?
It is recorded.
It is
Swollenberg,
recorded, yeah. Exactly. I do have one more question for you guys. Does anybody have a ticker symbol that we can do the technical analysis on? It doesn't matter what the ticker symbol is. I know, Swolzenberg, I know that you posted a few tickers in today. I think CLOV was one of them. Does anybody have any tickers that we want to go over? Or Swolzenberg, do you want me to use that ticker as an example?
When you have a second, Dave, can you go over Google?
Let's go over Google. And if you guys have any more, we'll do 2 more after this, okay? We'll do 2 more. So make sure you let me know after we're done doing Google if you want me to do one. All right, so here's Google on a weekly time frame. You can see I've already got these marked out. So let me just get rid of these so that way we can redo it. I've been watching Google for quite some time. We're going to throw this on the daily time frame. I like Google. I use everything I use is Google. So my Peter Lynch hat is on, and I say, if I like Google and I'm buying Google, who else is buying Google, and what are they getting their hands into? What I like about Google recently is all this news on people trying to break them down because they have a monopoly and the stock isn't going any lower. That tells me that the news isn't scaring any of these investors off. Now I'm on the daily time frame. If I zoom all the way out, we can see Google has been on a constant uptrend, right? Constant uptrend. So when we see that, we know that this is a stock that pays. It's not a boom and bust type of stock. It doesn't go straight up and straight down in any certain day. It's on a constant uptrend, and that constant uptrend is very kind of obvious to see. You can just pull it all the way back, right? You can see it's on a constant uptrend. Okay, so then we're going to zoom in on the stock a little bit, and we're going to want to identify the areas of support and resistance. And some of the very clear, distinct ones that I see are right here. You can see how many times this thing smacked into this area of resistance and support. And I keep saying area, but I'm clicking and we're just getting a line, right? So when I say area, when I click this line, I'm looking at an area mentally. What I'm doing is I'm going like this, okay? Oops, I'm going like this. So this, to me, is its biggest area of support, okay? Now we have this big, high, tight flag. Well, I'm not going to consider this tight just yet, but we have this high flag, okay? It broke out on high volume, and then we have this area. I can see a clear trending pattern up, and I see a clear basing pattern form right here, okay? My best case scenario, and I drew this out for you guys before, and it did not follow it, but I wanted to see it do this. Oops, I don't know why my chart just did that to me. I wanted to see it do this, okay, on this day to make a perfect pattern before rip tater chip into the north side here. That's what I wanted to see. But the market does not give a shit what I think or what I want. So I have to roll with the punches. What did I see here? Well, the market had a trend break on this, and I've been holding this since it broke its trend break. I seen this trend break, and I bought right here, okay? Now, I gave myself plenty of leeway to try and hold this trend up and held, okay? I held on to this because I didn't use previous day. I got in very small, and I added to it on the pullback. I was waiting for it to set up really tight here before taking this breakout, but now it has broken this base, okay? We can even zoom in further now. Let's go to the 4-hour, and you can see now that it's broken this base, and it broke all-time highs here. It broke all-time highs. Because it did not stop and create a new higher low, like you see here, we have a high, we have a new higher low. Because it didn't create a new higher low, and it broke out and made a new higher high here, that is telling me that it is very bullish. So I'm very happy to be a part of the stock, but I'm not naive to think that this couldn't pull back and continue getting tighter. It very easily could continue to pull back here and then start doing exactly what I anticipated it to do, okay? Sometimes that's just how stocks work, especially because when we go back to the S&P 500 and we see we're at the all-time high and I'm expecting us to pull back to get back into these regression lines, why wouldn't Google pull back? Simply because if we look at Google on the heat map, you can see that Google is a big component, is a big component. You can't see it because my head's in the way, but it's at the bottom left of the screen right here. It's a huge component of the S&P 500. Okay? What do you think, B. Stewie? Is there anything that you want to add to this, B. Stewie? Anything that you're seeing that I might not be?
You hit the nail on the head, man.
Thank you, sir.
Thanks.
I've been a carpenter for quite some time. Next, let's do.
Can you do BE?
Yeah, BE. Yeah, I think
Yeah.
that's Bloomberg. Yeah, Bloomberg Energy. So this is beautiful because you can see right here that I've already created the perfect scenario. So Bloomberg Energy had a big push up on volume, right? You can see that, and it started to pull back. And that's a great thing. That's what we want to see because you can't buy it when it's going straight up. So this thing started to pull back, pulled back, and then it created a new higher low, and I wanted it to finish this area of support. I wanted it to hold this new higher low, and I wanted it to get tighter before breaking out. The market doesn't care what I think. It decided to break its trend right here and then continue higher. Now it is pulling back. A retest might work where it comes back down. It retests this area of breakout and then it continues higher from right here. It could very easily do that, or like I said with Google and with the overall market, it could easily come right back down, finish this channel, and then take off higher.
What price is that that you think it might come back to? Those
Well,
smaller.
if you look at the trend, okay, you can't ever be spot on, but if it were to come
Right.
back, we could imagine that it would come back and retest somewhere in this 2450 area, okay, somewhere in this area before creating a new higher low, because that's what I'm looking for, right? Because I keep doing that. Sorry, guys. So if we look at this, my biggest issue with this stock, and the whole reason why I wouldn't have taken this, is because I don't have a new higher low. I'm just getting new lower lows here. I got a low, I got a new lower low, right? Because this is lower than that. And then I have another new lower low. I'm also getting lower highs. Here's a lower high than this high. Here is a lower high than that high. There's a lower high than this high. So this is just channeling down. We aren't getting any change in direction. This is the first sign that it has changed direction. So if this stock comes down anywhere above this new lower low, then it has finally created its first new higher low, which to me signals that we have progression. Until we have that, we don't have shit. We just have a stock that's just ranging, okay? So this is great. The fact that it cleared this new lower low and created a new higher low, I'm sorry, a new higher high, then that is a good sign. But now we need to see where it's going to pull back to. Will it pull back to the trend line at $25, $24.50? Will it pull all the way back here and then start to go higher? That I have no idea. You know, that's why we have to wait for it to set up. That's why I wouldn't have taken this trade at all, because I don't see those new higher lows being put in. Okay. Does that make sense to you? I know when I say new higher lows,
Yep.
new lower highs, it can be confusing, but the more you hear it, the more you'll understand it. But just remember, what we're looking at, what we're looking for when we're looking at channels like this is an area to be held and then supported. Right now, we wanted to see this area hold and support, but it broke lower. Then we wanted to see this area be held, and it did. And it went higher. That's a great sign. But when it pulled back, it didn't create another new higher low. You know, so if we were here on this day and you asked me the same question, oh shoot, I'm sorry, and we pulled back and you asked me the same question right here on this day, I would say this is looking really good if it holds this new higher low right here. But it didn't. It broke down and created this new lower low. That's a bad sign. Okay. So we have to wait and see. Will it create a new higher low, or will it create another new lower low? And then we have to wait for it to create another new higher low before we can actually take this trade. So that is setting up. It has potential, but when is it going to actually give us an answer? That's the real question. I got time. We'll take one more ticker if you guys have it. If not, let me know.
Palantir.
PLTR. You know what? I haven't looked at that leader in a while. Let's take a little peeky gander and see PLTR. What is going on? Do I need to sign in? Testing your strategies with an incident. I don't need. Oh, that's why. Jeez. Exit. Oh, that's why. Okay. Sorry, guys. All right, PLTR. Look at this beautiful, beautiful stock. And I can tell you right now, without even looking at this here, without even looking at this pop, we're right into resistance. Why? Because look at this area right here. It's touched once, twice, 3 times, 4 times, 5 times. It broke above, came back down through, broke above, and came back down through. We created 2 new lower highs. And now we are in an area of resistance. So when we look at the stock, the first thing I do is identify where our support/resistance is. It acted more as resistance than it did support, as we can see, and it created a new lower low, and it's creating new lower highs. We need to see this thing get above this area of resistance. We want it to come above, and then we want it to retest this area for it to be a bullish sign. But if it does not, and it comes up into this area and hits it and starts to fail, I'm going to expect this thing to continue lower, and then we'll have to see, will this create a new lower low, or will it create a new lower high and come back up and retest this area? So that is my thoughts on PLTR. I know that people are saying it's overpriced, it's over this, it's over that. The technical analysis tells me yes, people think it's overpriced. Yes, people are worried that PLTR is not what it's worth. But if there is a change in this character, we will see it, and we will be there to be able to capitalize on it. But I think PLTR needs a lot more time. I'm talking 2 or 3 weeks more to tell us what's in store for it. But overall, doing what we have done so far today, with the S&P 500 being at an area of resistance, being that, we looked at Microsoft, MSFT, that is at an area of resistance. When we look at NVIDIA, we can see that is right at its area of resistance. Google, we looked at that. That looks like it's showing some resistance, and it might go back into its channel. I do think that we have a pullback coming up soon. Now, I'm only saying that because I'm looking at the technical analysis and I'm making a judgment off of that. Could we continue to melt faces and continue higher and rip, tater chip? We absolutely could, and I would love to see that. I would love to see that. I am full in the S&P 500 with my big boy account right now, and I want nothing more than to make money, and everybody else that's in it to make money. But when I'm using technical analysis, I have to make proper judgment, and I have to say there's a big area of resistance that we're in, and I could see us coming back. So I'm preparing myself mentally for that. I went through, I made sure all my stops are set. So if we do really crack down, that my stops are at areas below support. And yeah, that's just what I'm doing to prepare myself. So I hope you guys enjoyed this technical analysis section. I really thought I was only gonna spend 20 minutes on it, but I truly am a jaw jockey. I hope you guys enjoyed yourself, and yeah, I'll be on here for just a few more minutes to answer any questions.